How will the market volatility we've seen lately impact deal-making and IPOs for the rest of the year? Joining us now exclusively is Gregg Lemkau, co-head of the investment bank at Goldman Sachs. Greg, great to see you. Thanks for joining us.
Great to be here. Thanks for having me.
Before we dive into some of those topics, let's start with the macro environment and the trading environment. Been a crazy week. On the macro front, do you guys expect a recession in the next 12 months?
Yeah, I don't think we do. But as you said, it has been a crazy week. It's been an unbelievably volatile week in the equity markets, kind of day by day, and driven by real concerns. The trade war and the tariffs are real concerns. The inversion of the yield curve is a real concern. But I think as we step back and look at the S&P and the other major indices at 95% of all-time highs, and you've got interest rates near record lows, and you've got an economy that's still growing. So not as fast as it had been growing last year, but 2% for the U.S. and 3.3% globally is still a pretty darn good operating environment. And we continue to believe that we're going to be able to push through this. Now, I think the overarching concern is we're late cycle, and with every day we're sort of later and later cycle, and that is hanging over all of this.
How have markets functioned in this past week and the week before that? Has there been good flow of trades, nothing that's been held up?
Markets have been functioning great. So the deals are getting done. The volatility is quite dramatic, and you've seen the swings we've had in the equity markets. And as you're trying to get transactions done, it's challenging. But for the most part, markets are functioning quite well. Transactions are getting done. Deals aren't getting hung up, and companies are still doing business.
I mean, one of the things we've heard and one of the things we've seen this year is that the IPO pipeline has been very robust and that it's been ideal conditions for companies to go public. Do you expect that to continue?
I do. It's actually been a relatively good year for IPOs, in particular in the U.S. and in particular against the backdrop of volatility. We've seen some of these long-awaited companies like Uber and Pinterest go public, but what's been most impressive about the IPO market has been the breadth of companies that have gone public. So companies like Tradeweb and Levi's and Beyond Meat. It's a pretty broad range of companies that's been supporting the market. And while we've seen a couple of companies struggle, for the most part, this class of IPOs is up on average 24%.
A couple of companies is a little bit spin on the numbers, I'd say. There's been 106 US IPOs, only 58 are trading higher from their IPO levels. Does that make it harder for attracting more IPOs later this year?
It does. The backlog in the pipeline is quite strong. I think for the most part, these are case by case, and every company is being looked at and evaluated by investors on an individual basis. The market really values growth, and a lot of these companies that are coming public offer that growth. And I think the challenge with some of these companies is there are business models that the public markets haven't seen. The public market hasn't seen a business model like Beyond Meat or Uber, for that matter. And so that makes it interesting to try to value them out of the gate and trade them over time.
WeWork obviously dropping its filing this week as well, given maybe some of the quality around some of the numbers there, the fact that it does have a very complex ownership structure definitely raises the question, when you see a company like that getting ready to go public, is it a market top?
Yeah, I don't think so. I can't really talk about WeWork because we're involved in the IPO and it's in registration, as you know. But it's another example of one of these companies that's an iconic company and a new and evolving business model. And it'll be interesting to see how the markets value it and trade it over time.
Do you approach, though, the loss-making IPOs differently from a more kind of traditional company that's got a clear PE ratio and earnings? And do you target different potential buyers of those stocks?
Not necessarily, although I think the valuation metrics for companies with profitability and EBITDA are tried and true, and people know comparables to look towards. And it's the business models that aren't earning money now but are growing at a growing market share that you need to build out the business model, show where profitability comes from. You can do it on a cohort-by-cohort basis, which I think helps investors along the way, and do it on a market-by-market basis. But ultimately, companies need to earn money and need to be valued on how they earn money.
A lot of people criticize the Uber IPO, particularly the fact that it listed on a very negative down day for the markets. If WeWork was due to list on this past Wednesday, would you pull that? Were there any lessons from Uber that you've taken and you want to apply to
It's hard to pick the day on which you price it, as you know. On Uber in particular, as you know, it was a Friday, so it's hard to then push it through the weekend. I think a lesson might be to not try to price a transaction on a Friday so that you do have the flexibility if there's a particularly bad day in the market to push it off another day. It becomes quite complicated to try to push it through a weekend.
Let's talk a little bit about the M&A environment right now. I mean, given the fact that we do have interest rates pushing lower right now, it seems to be lower for longer. Do you expect we're going to continue to see more deal making, more consolidation?
I do. It's a pretty robust M&A environment. We've seen $2.5 trillion of M&A volume this year. It's down 9% from last year, which was a great year, but it's still pretty active. I think the most encouraging piece about the M&A market is it's operating on a bunch of different sectors. So you've seen healthcare continue to be strong. You've seen technology, in particular software, continue to be strong. But the encouraging piece are financials, which we hadn't seen any activity. You've seen a bank deal. You see 3 big financial technology deals. You saw with LSE and Refinitiv a big information services deal, so that's encouraging. And then I think the battle over Anadarko shows that there's more activity to come in energy.
Will CBS Viacom prove to be the last big U.S. media deal of this cycle?
Depends how you define media. I think, I look at CBS Viacom as almost a restructuring. Right? Those are companies that had been together. They're still owned and controlled by the same shareholder, Sherry Redstone, and a lot of the benefit of putting those companies together was benefits of scale. And so you saw, individually, CBS and Viacom were smaller than Spotify and Electronic Arts and Activision. So they've become smaller than these new media companies, but combined at $50 billion, they've now got at least more scale to be able to compete in the content game with people like Disney at $300 billion and Comcast at $300 billion. So I think scale is beneficial in that sector, so you could see further consolidation.
When we consider the weakness of the Eurozone economy, Brexit coming up, and the associated currency weakness, why haven't there been more cross-border deals and people making the most of the strong dollar?
Yeah, it's interesting. You rarely see currency movements drive M&A. And for the most part, companies that are denominated and trade in sterling have their revenues and earnings in sterling. So when the pound goes down, so do the revenue and earnings. It's not always the case. And even when it's not the case, it still doesn't drive activity as much as you'd think. I think people tend to take a much longer term point of view. And given that you can't quite price a deal and close it on the same day, you're still subject to currency volatility and valuation throughout the pendency.
Given the tensions, the trade tensions between the U.S. and China, the fact that CFIUS is taking a much more heightened oversight stance on money that is coming in from China, have you seen cold water thrown on deal-making between the two economies?
Yes, without a doubt. The deals between the U.S. and China are down dramatically. I think deals in the technology sector, it's going to be really hard to imagine them getting done between the U.S. and China. And I think there's been a general wave of protectionism globally that has made deals harder to get done, where other than regular antitrust overlays on transactions, there's been a political overlay on jobs, on headquarters, on things like that, back to where we were seeing 15 or 20 years ago. But it's definitely in the minds of boardrooms around getting transactions closed.
On the topic of antitrust, politicians are mentioning it a lot more on both sides of the political aisle. Are you seeing a rise in the amount that clients are asking you for advice on that topic to help with spin-offs or restructurings so that they don't then face antitrust pressures?
Yeah, it's interesting. In the M&A game, it's always been a key consideration. I think what you're starting to see with clients now is maybe not antitrust per se, but the regulatory overlay is becoming a lot more real, in particular for these technology companies. They had not really been seen as being in the crosshairs of the regulators, and they certainly are now, and so they're reaching out to try to get advice on that.
One quick final question, Greg. Your business in Hong Kong is significant, big office there. How have things been functioning over the last couple of weeks?
We're paying a lot of attention to what's going on. Surprisingly and thankfully, business is functioning quite well. So our people have been able to get to where they need to get to serve our clients and be able to do so safely. But there's a lot of stress and anxiety, and we're doing everything we can to support our people and our clients to try to mitigate that.
Gregg Lemkau, thanks for joining us here today at Post 9.